Hey, this Chris. Can you hear me okay? I'm dual broadcasting, actually triple broadcasting, just to let you know overall the trades aren't bad. The losses we took stunk, but that happens in a straight up market. That's why you try to diversify. So that's what we're doing. But just to let you know, I'm going to dual broadcast and then I'm going to put it on social media. And I'm basically going to talk about what a top looks like, but I'm not sure this is a top, but that's what I'm going to be doing. So just to let you know, right now it's still a serious divergence between bonds and stocks, but as you see, it's just not today. No, it's just not today, and or at least now. So I'll be going over it, but to me, that's not a top yet. They haven't broken. So I think the key is going to be if Nvidia can get under that black line. So besides that, you see that economically sensitive got trashed. So that's where I am right now. So give me a second to go and humiliate myself on as many places as I can. There you go. Good morning, free room. I'm triple broadcasting on social media, on the free room, on the Chart Patterns Mastery, my normal room. And I always give them a bonus, and they're in here now so I can humiliate myself in the most places possible. So I wanted to show you what we're looking at in here. What we're looking at is still this major divergence from this week. I mean, for weeks. And what do I mean by that? You got the ES up 40 on the upper left. And I want to be sure, by the way, you can hear, hey, Lorna, the advanced decline just goes straight down. So if you try to play the caterpillars, which we did earlier, you have to play it fast. So we bought in here, sold here. Yeah, you wanted to let it run. You just couldn't. This went to a new high. That started going down. In fact, that was going to be the theme for today, is what a top looks like. So that's what I wanted to go over, because theoretically I like looking at the bonds versus stocks, and that's just not there at the moment. So I just thought I'd show you at least what I'm looking at in here of what a top looks like. Well, obviously a top's in the stocks I'm long. No, all kidding aside, what I'm looking at in here is if something goes down, it's all about how it works off any kind of oversold. Forget about CAT. These stocks stunk anyway. I'm talking about something like Nvidia. And that brings me to something sort of important. Number one, this led the markets up. That's your little bull flag. I know it's hard to buy on the way up, but let me show you something. Give me a second. But the way I look at it in here is if you see a little top, it's in a long-term uptrend. That's the problem. Everybody's like, oh, it's a blow-off top. The advanced declines stink. I totally agree with all that, but you don't have that rollover yet. So this is what I'm looking for today. So number one, I can't copy and paste stuff. For some odd reason, it's not working. But what I'm watching is this black line. I'm not obsessed with the VWAP. I just want to make that clear. I am not obsessed with it. But if it's over it on a 1 minute chart, it turns green. If it's under it, it turns red. So you see the advanced decline stinks. So that shows you one thing graphically. The reason I have this is if one of these breaks, usually the others break. So just keep that in mind. At least that's what I'm looking at. So in there. So what I'm watching is this, that these aren't tops. You got to see one break before the other. So you got, and what I mean by that is As you see, none of them got to there. None of them turned red. So I like visual stuff, just so you know. I like visual stuff, and none of them went there. Now, this is a couple of problems. Number one, you might say, how is the ES up if the advanced decline's on its low and the bond market's on its low and the stocks that have been laggards are on their low? That, narrow rally. So the way I'm looking at it is you don't have any of the stocks in the NASDAQ rolling over. I know they should, but the ones that have been the leaders haven't rolled over. So, I mean, that's how I look at it. Like, what does rollover mean? Rollover, that's tough. So, the first thing in a rollover is you want, like a line technology, you want something that broke decisively. And when it works off, it's oversold. You can go to a daily or a 4 hour. It doesn't get back over anything. So it worked it off and stayed under the ATR trailing stop in the 50. So, I mean, that's how I look at it in there. So it's definitely an art, not a science. That's for sure. I'd be the first to tell you I suck at art. So, no, all kidding aside, usually in this type of market, you just got to trade. I know everybody says you got to trade what you see, but if you're seeing this go up and you're not seeing any of the stocks that might pull it down in the NASDAQ, because so much of the NASDAQ is those stocks, these. So the thing that made the NASDAQ go up yesterday was Nvidia. So whatever made it go up yesterday, if it doesn't roll over, they're probably not going to roll over. Now, in the meantime, though, let's just say that one of these is looking toppy. Toppy to me would be under this. Let me show you. Now, I'm not saying we're going down. I just want to show you this so you have an idea of what I'm talking about. There, toppy to me, well, that's obviously nothing. It's just extended. Toppy would be if it got under here, at least made a new low, got oversold. See how oversold this MACD. So I was one of the first to really obsess about the MACD. When it got oversold, what did it do? It didn't form a bear flag. It went nuts. If you want to see this have a sustained down move, I just went to a 2-minute. But you could do a 2-minute, a 15-minute, an hourly. So you want to see the oversold reaction result in a bear flag. So you obviously don't have that yet. So just want to mention that. To any of the stocks that we watch, just run out of gas. So let's look. Well, yeah, all the ones I wanted to buy, but we're not in them. We scalped them. We're out. See you later. So how about these? So I think you see a mile away, which one looks the worst. I'm not talking about the NASDAQ and all that. I'm talking about like an if then. So the way this market works, no, not works like I'm an expert at the moment, but the way it's been working is bear flags aren't working. But of these, I think you see the one that looks the worst. Does everybody see which one refused to go higher when these all went higher? Well, that's one. Yeah, you're right, Jane. But what else? Looks like Apple. The only problem is, like I said, all of these had bear flags at one time and went up. So that's what you have to watch out for. Now, I'm watching this. So I'm watching the Nvidias. I put it twice. I like Nvidia. No, just kidding. I'm watching these. So if I see this go to a new high and some of these go and break this and turn red, yeah, I'll change. I'll get a lot more aggressive on the downside. But at the moment, it was the only thing I regret in our live chat, and I regret things a lot, is missing this rally. It's just so hard to buy it when it's so extended. But everybody is keen off Nvidia. And usually, ask John Carter about this. He's really good with this. Usually, when a stock gaps up much more than the expected move for earnings, it doesn't go down. It doesn't go down for a long time. I'll give you, for instance, here's Chipotle. Not now. I'm talking about on that. Yeah, I knew that wasn't Chipotle. I was seeing if you were paying attention. There you go. It gapped up on earnings and it just hasn't gone down. It took it 2 months for it to start forming a top. And I'm still not sure it's a top. A top is when it gets over this, gets under that, works off any kind of oversold by staying under it. That takes a lot of patience. It's really hard to do that, but that's what you're going to have to do. So when I look at this, though, and go back to it, the only thing that looked like a bear flag to me, so no, it doesn't mean a bear market rally. It means you wait for a rollover before you get short. And I'll show you that of what happened back then. So just show you. No idea. Well, let me just put it this way. The odds are it's going to 400. The odds are. I'm not doing it, but that's the odds. When you have the bonds down, it's just a tough call. Real tough call. But I see what you're talking about. Yeah, Rodney, that you got to buy dips in a stock like that until proven otherwise. But you still got to respect ultra short-term charts when it's this extended. So, yeah, you could get in here. So that's with the bonds down, it gets a little hairy. But I wanted to show you of the stocks I was watching, other than what Jane mentioned with the Russell, it was Apple. That sure looked like a bear flag. On the other hand, every time these NASDAQ stocks have a bear flag or a top, they go crazy on the upside. Very scary. In the chart patterns mastery, we bought the 175 puts at like 20 cents and 24 cents. If I'm going to bet on something, I'm going to do it in the least painful way as possible because these haven't worked. So you'll see on a 15-minute chart, these things are still in an uptrend, barely. So that just seemed like a cheap risk reward. So besides that, that did run out of gas, no doubt about it. And the stocks that I thought would start catching up went straight down. Amazing. Just went straight down. So this divergence can go on for a long time, but this is how tops usually look when you're in a massive uptrend. Massive uptrend. And by the way, this could be a bear flag. But when I get to the ES, I like using a 5-minute, a 15-minute, and an hourly with that MACD. Just because it's overbought does not mean it has to go down. When it's overbought in an uptrend, and I call an uptrend this. I mean, just an easy way to do it. You don't have to do it this way. But I call an uptrend when it's over this ATR trailing stop. So overbought in an uptrend does not mean it's going down. So just keep that in mind. That's a 15-minute. An hourly, yeah, it's overbought. What does that mean to me? It doesn't mean to short. It means I don't want to chase it. That's all it means to me. So that's all it means. So no more, no less. So just keep that in mind. You just have to be patient, which is a pain in the rump. And if it's anything like if it's anything like 1999, 2000, so we go over this a lot on the chart patterns mastery. That kind of mania can go on for a long time. The biggest way to lose money is to say, well, those stocks have a high price to sales. Well, Amazon had a high price to sales all the way up, like 200 price to sales. So, it's all about perception. But you asked about what a top looks like. So let's go over it. So in here, and I'm telling you, I don't look at haramis. I only look at big red candles and big green candles. I did a hour thing, half hour to hour thing last week on that, if you can go back to the videos. But I've seen more people lose their butt if they don't concentrate on only a few patterns. A doji and then a follow through to the doji, or a green candle. Well, this one didn't work, but usually that's not big enough. I want big candles, and I want either a green candle to take back half a red or a red candle to take back half a green. That way I can have a backstop. But I've seen more people like yesterday that thought the markets were a doji, were going down. Doji doesn't mean you're going down. It means to respect the move in either direction. So that's what I'm doing. So yeah, I don't look at the financials, but you just saw what I was talking about. Oversold. It just isn't time yet. Just isn't time yet. It might be later, but like I said, when you get this kind of rah-rah market, you cannot fade a bear flag. See, unless you want to go buy like one of the 175 puts to satisfy your urge to participate. That's about it. So definitely not a top yet. I have to see this. I just can't stress it enough. And it's because I've made the mistake many times. You've got to start seeing some of these stocks that made the QQQ go up roll over. You're not seeing anything. You're not seeing, and I mean like relative weakness. Like I said, I don't interpret the VWAP literally. If I did that, I would have gotten stopped out 20 times today. So I'm taking it as all of these in relation to each other. That's all I'm doing. And that's all I'm doing at the moment, which means I have to wait. I don't want to buy when it's ridiculously overbought, but I don't have any signals telling me that you're going down. Now, if you want to do Nvidia for next week, you can try to do a spread over the market. Sure. Just that. I mean, sure, you could do a spread over the market. But this is what I want to show you. And like I said, if candles work for you, great. But I've just seen, I can't obsess, like I don't obsess about the VWAP. I don't obsess about a candle unless it's a biggie. Like this. I mean, at least this took back half. It wasn't good for much because we're in a big old bull market. I mean, not really bull market, but we're in something. But you were asking what it looked like in 2000 and 1999. Let me show you. So here's the NDX on a weekly chart. On the right, just to let you know, the bond market had already gotten slammed. Usually the NDX, when interest rates go up, they're very sensitive to it. If they're in a mania, they stay up longer than you'd think. So, but I'm going to take it on a daily and a weekly, and I'll show you what, just since I've been in the market 40 years, what it tops look like. I mean, overall, it's never exactly the same. But that's what a top looks like, where it goes up parabolic wise. Yeah, like now. In fact, on the right, let's just show it on a weekly chart now. It's not the same yet. Here was, and see on how the monthly got oversold on the MACD. It then worked off the MACD by only doing a 50% retracement. That's all it did. No more, no less. And then it resumed down. Believe it or not, the NDX is only at the 50% retracement now. Now, the only difference is back then, everything was going up. Webvan, anything in the NDX that was internet related. I mean, 200 stocks, everyone was going up. This time, I'm telling you, you can do it by the advanced decline of the overall NASDAQ. Yeah, that won't tell you much. I'm talking about like today. There you go. NASDAQ on the high, this is on the low, which means if you're trying to buy the other NASDAQ stocks saying that they're going to kick in, boy, that hasn't worked for weeks. So that's a lot different than back here. But this is still a good guide about this. So just hey, I'm not like Fibonacci Queen, who I'm a friend of, by the way. But believe it or not, it's only at the 61.8. Finally. So how about on the left? Now, like I said, I'm not obsessed with Fibonacci's. I'm obsessed with the ones that the more hedge fund managers are watching because they're more likely to work. There you go, 61.8. Yeah, that's back then, that's now. What's the big difference? The big red candles over here. I'll clear the drawing sets and show you. And like I said, that does not mean this second you have to do anything when you're this overbought. It's just going to be frustrating because you're going to miss the beginning of the move. But almost every single one of these was a green candle, big green candle, followed by a red candle that takes back half the green. This one, the opposite. Yeah, not this bearish engulfing. I don't look at that. I'm looking at a big green candle, the biggest green candle. Well, actually, the biggest red candle for 6 months. And then the green took it back. So once it takes back half, a lot of traders buy with a stop here. That's 200 points. I don't know about that. But that's what we're talking about as a trigger on the upside. Just like here was a trigger on the downside. So you had a big red after a big green. Yeah, red after a green, red after a green. You see what we're talking about. Even though those aren't as big as I like, that's a weekly. You very rarely get them just crazy. But if that's true, check this out. Do you see the red candle? I don't. And that's the point. If you see this go to 1390, 300 points, heck, yeah, you're going to get a big red candle. You just don't have it yet. Even here, you had one. And here, this one was funky, but it ended up working. But you don't have anything resembling that yet. So even here, you had a red candle and then a doji. That wasn't a big enough red candle, but the doji told me to respect the break in either direction, which is what I did. So that's, mainly how it looks, which means when it's doing this right now, what's your game plan? Is your game plan to go in there and try to be a hero when it looks like that? I'm not laughing at anybody in here. I'm laughing at myself for just not knowing. It's very unusual to have the bonds on their low, to have the rally this narrow. It wasn't this narrow in 1999. This is a daily. I thought I'd show you. There. That's March. How do I know it was March? Because I got my father-in-law to open a trading account at the exact top, almost the exact day. I could go back to a statement and you'll see it was like March 17th. It's incredible. And he always talks about the market did this and he broke even, that I must be a good trader. I'm like, I don't know about that, but he averted disaster. But the point is that you first got something that at least you could draw some line. It's just really hard to do it after it's down that much. You could try to do it like that when it follows that, but I'm just telling you right now, you don't have that yet. So you just don't have that yet. And also keep in mind, this is what happened because I talk about bonds all the time. I'm just trying to show you ideas of what divergences look like, but you don't have any kind of cross yet. This is the bonds in 1999. I obsess about the bonds because if bond yields go up, a lot of times there's nowhere else to put your money, or NASDAQ stocks go down. There's the arrow for the bond sell off. An entire year of bond sell off. The NASDAQ didn't go down until 3 months later. It was a lagging effect. Then the bonds started going back up. But the point is that it usually has a lag time. So how about this time? What are the bonds doing? This is a lot different. The bonds are on their low and the NASDAQ's on its high. Now you might say, well, doesn't that mean in 3 months? Well, the problem is this has been going down a long time. So this listened for a second, but not long. So usually you got to wait for a reversal candle, whether it's a daily or a weekly. And you're going to miss the beginning of the move. I know that's corny, but that's just the way it is. Now, the other thing, if you're playing really short term, real short term, you're going to look at something like this. So here, I'm talking about day trading. So you look at this like that, and you're looking at this just went up, sold off all of 8 points. So what acted hypersensitive to that tiny sell-off? That. Yeah, that still doesn't mean it's going to work. But the point is that this went to a new high, why this didn't, and that's this little sell-off led to this. That's what you're looking for. The problem is that if this sells off to here, where it was at 1140, that's about 31 points. The way the markets have acted, that's not necessarily that'll go down. Then that'll lead. But we went and bought these. And I'm not saying buy them now. I'm saying that if Apple does keep underperforming, then these might go up. But like I said, it might just sit here and they go to 8 cents in the next hour. Our idea was to lose as little as possible on an opinion. I like having 3 reasons. I do not have 3 reasons. So maybe one is Apple's acting weaker than the whole market, but that sure doesn't seem like a reason to me. And you might ask, what do I mean by that? The thing is that 3 reasons to me means you got to see something roll over. Yeah, you might say, how about that candle? The red candle, no, it just isn't doing anything. Those aren't really big. I like big red candles on a daily or a 15. Hourly. Yeah, it filled the gap. I don't count that as a reason. In this type of market, I have to have a reason being like a bear flag, a gap, and then a consolidation. I don't get that yet. So, yeah, you could look for long ideas too. The problem is most of the ideas I like on the long side playing catch up are not acting well. Longer term, what's Caterpillar look like? This on the right. Sure, it broke the uptrend, downtrend, and then it just crapped out. So the easy thing to do is to think, well, you should do some spread over the market because they'll catch up. But I just don't have enough reasons. I'd rather do it if it forms some kind of bull flag over everything. And I just don't have that yet. Yeah, but like I said, I know it sounds corny, but there's certain times that I just don't want to be aggressive. And if I'm aggressive, and I'll tell you right now, we lost money. The last 2 days, I've done not as good as the first 3 days of this week. And that's because we were short some things and long some things, and this divergence hasn't worked. Most of it was small. And then intraday, I post on the bottom for the live chat because it's just too wiggly. I wiggle. So I'll sell something, buy something, sell something, and come out ahead, trying to work around everything else I have. So, but it's been the last few days, I've not, when you see Nvidia open up 80, I wasn't short Nvidia, but it's going to mess up your theories. And then you just try to lose as less as possible until things kick back in. And that's what we're doing. So this does not mean to short. Now, this is another thing a lot of people get wrong. They look at a Head and Shoulders and they're like, it's going to get killed. There's too much support right now at the moment, just under markets. You can't do that. The other thing is, I'm looking for that trend lines with not a lot of support. Now, the problem is that's only like 6 points. That's pathetic. But that's what I wanted to show you. So you just don't see it. The other thing is, and a lot of people miss this also, is most of the things, 80% of patterns are continuation patterns. That's why I like these. Because what happens is it rallies, it gets temporarily overbought on some kind of, whether it's a 15-minute or a 1 minute, and then it has to catch its breath till the next move up. So we just don't have that on the downside yet. Even though that refuses to go up. I've seen this rodeo before. So what happens? It takes like 30 minutes, an hour of it just sitting here. And by then the puts might be unchanged. I mean, zero. So it's just not the right environment yet. Now, if this breaks, well, let's take it on a longer term. How about a 5 minute? Maybe. But this has to be up only like 250. Now, what's been happening is when that's up 250 and this is underperforming, then this goes up. So you got to be real careful. If you're doing anything, it's tiny. And that's what we did. We did something that's a great bang for the buck that we're not going to lose a lot if we're wrong. Now, I don't like having that self-defeating idea, but when this is just straight up, you have to just look at things that if you're betting one way, and I call it betting when I don't have a lot of reasons. If I have the edge, which I think is a lot of reasons, that's different. But I don't have a lot of reasons. Why do I say that? I'll show you on a non-VWAP that screws you up. All right. So what I'm looking at is an hourly. Darn right it's overbought. How about a 15-minute? Well, this is what I mean by working off it's oversold well. Holy cow. Now, the thing is, yeah, that might be a doji, but the problem is, and negative divergence, it just isn't going down yet. I'm telling you, I know it sounds like a pain in the butt, but if that happens and gets oversold on a 15, and then it rallies to just be a top like that, that's a whole different situation. But that might take five, let's say, that might take an hour and a half. And by then, everybody gives up and says it'll never go down. So just keep that in mind. So definitely MACD. And what do I mean by that? How it works off this when it's overbought, but it's over everything. It's really tough unless you go to a shorter term chart. So if you go to a 15 and it was overbought, how's it working off the overbought? Not bad. How about a 5-minute? How's it working off any overbought? Not as good as it did before, but really working it off bad would be if it just stayed in this zone and formed like a bear flag, which it hasn't. So, and the other thing, you would think, let's try a different thing. Let's say this goes straight up. You had that little bull flag, and you're like, yeah, that's going to pull up every good chart. Well, let me tell you, I lost on a good chart. So this is why I really don't like doing call debit spreads in relatively small stocks, because you have a habit of not getting out. So I'll show you. Hourly chart in Halozyme or Halozyme. There you go. There's your bull flag. I bet you would have thought that if the Nasdaq was up 500 points over 2 days, this would be up here. Instead, it got nailed. And that's because the XBI got nailed. In fact, it's almost on its low for the day. It just seems like every hedge fund is piling into 10 stocks, which makes it extremely difficult to time when they're going to give up. And that's how it looks to me, which means you got to just wait for your pitch. And I can't tell you, I was just looking at some charts, how many bullish patterns did not work this week. I'm telling you, if earlier in the week you would have said that the stocks you're bullish on would have broken up and gone crazy. So I want to see if I have it, because this is why stops are so important. Let me see if I still have it. Yeah, there's a good one. That stayed up. Yeah, I'm going to look at that one later. But you're going to see a lot of them went straight down that had bull flags. And so then it comes down to, are they just working off an overbought MACD and you buy them at support? And it's a great question. It looks like a bull flag to me, but the problem is that if this sells off, are they going to stay up? And that's what you're trying to figure out. At least that's what I'm trying to figure out. So I'll build a watch list of these. But look at that. Yeah, if you would have bought it earlier in the week, you would have gotten slammed about 20%. It gets you awfully scared of buying stocks that are overbought in a downtrend, in an uptrend. There are a tremendous amount of them that didn't work. I'll show you some really good ones. There, that didn't work. That didn't work. Yes, the verdict's still out. It's acting pretty well. But I'm just telling you, it's not like everyone went up when the Nasdaq's up 500 in 2 days. Oh, pardon me, 600. So it's just not. It's a very narrow rally, and believe it or not, I know the biggest question on everybody's mind: does that mean they're going to get destroyed, or does it mean everything else is going to catch up? Well, the problem is you get yourself in a real pickle if you buy the ones that refuse to go up, but they have good charts, and you short the NASDAQ that refuses to go down. It's a lot easier to just change your time frame to ultra short term. That's what I've seen. And like I said, the biggest thing in here is to watch and see if any of these, while the NASDAQ's up, start approaching that VWAP. Now, that's just a standard VWAP on Thinkorswim. It's not any complicated thing, just to let you know. No complicated stuff. No, I would not. When I look at a MACD rollover, I just don't see a MACD rollover. What I see is that in oversold in an uptrend, it's not time to screw with the ES on any time frame until you really get either a reversal candle or a top. So I just don't see it anywhere. So anywhere. So the only thing I'd do is I'd look for, sure, if this, I'm telling you, if it sells off here, which that's a big if, that could be a bull flag. But if it sells off here to here, then, like I said, you need to see on a MACD how it works off its oversold. When you're talking about buying, it's when it got oversold down here in an uptrend with a bull flag. A lot of programs, a lot of funds, algorithms buy when it makes a new high. And the other thing, and it's a really big deal, when you're playing stocks that are laggards, let's say you're playing Caterpillar. So you think this stock is going to test down here, which it's done, and you want to buy 100 shares for the day. Well, the problem is it's all about time of money. So you're buying $21,000 worth of stock. The problem is the options are too expensive for today, which means that they're factoring in like a point move already. So if it goes up a point, you're going to break even. But if you're doing anything in a Caterpillar, you have to do it as a call debit spread farther out. Now, keep in mind, Monday's off, so these things are going to lose value in a hurry. Now, I'm not doing this. I do not like doing call debit spreads out of the money in a stock in a downtrend. If this had this, and the MACD was under here, and the stock was over its ATR trailing stop on a daily, heck yeah, I'd look to buy premium. But I just can't do it now. Can't do it now. So S&P earnings, the only thing I look at is how the bonds, the lower the bond prices go, the less the PE should be. In a mania market, that's not necessarily work. And you got to, first priority is chart patterns. So second is support and resistance. But within that, sure, I'll look at fundamentals. But when you're at a mania kind of thing, you just have to pick your spots. I think the market's ridiculously overbought. It's retraced 50 to 61.8 of its sell-off from 2022, and the bonds are almost back where they were. But you see, it just hasn't rollen over yet. So, I mean, that's what I see. And yeah, I think they're going to do a debt ceiling, but has the market already factored that in? Yeah. And as you see, nothing's selling off. So, I mean, that's where I am right now. Nothing's selling off. Now, if you get a debt deal and you open up with a big green candle and then a big red candle takes back half, yeah, that might be a temporary top. But I really want to see something like this, where you get a sell-off and then a bear flag under the ATR trailing stop. And you haven't had that. I really wish you wouldn't bring up LRCX. I didn't post it in the chat. I lost 5 points on 5 shares. So there are times when things set up and times when they don't. This set up when it broke the bull flag. On the other hand, then you would have gotten smoked here on that bull flag. Yeah, it's not that easy. What do I think now? That objective. 140 points from that. That gets you to 660. How about on a weekly? Because that's one thing, but chart patterns are more important. There's your massive resistance. It's over it right now. That's your zone that you know, and ideally you look for a reversal pattern up here. But let me just tell you right now, this is what you want a bearish pattern to look like. This is LRCX upside down. There you go. That's what you're looking for. You're looking for consolidation patterns under the ATR trailing stop. Now, it's really difficult to short it when it's gone down that far, but it worked. You had the direction known. That's upside down, just so you know. And it took 3 months to work. Very, very frustrating if you're a bear. So it got all the people converted. Well, there. If you're a bull, you got very frustrated in that area. And then you're like, I don't believe the breakout. So it's really a better buy here when the direction was known. Oh, small talker, just a minus in front of LRCX. But I don't know what would cause the market to sell off because the bonds have gotten destroyed and the market doesn't care. So to make it sell off, you got to see the leaders, those 10 biggies, just start to roll over. So you're not seeing that yet. But it's a good question. I'm just looking to see, in answer your question, what would make the market sell off? Probably not. Well, sure, it could be something fundamental. It could be something happening in the world. But that's what you're looking for. You're looking for like a indecision candle followed by a follow through, even though that wasn't perfect. So I think it's going to come down to chart patterns and reversal patterns and miss the beginning of the move. I know you hate to hear that, but that's probably what it is. And this is always the tough part, ridiculously hard. Let's say overbought short term. Now keep in mind the ES is not overbought. It's actually oversold. Now the Nasdaq, that's a different situation. But the point is that if this sells off, will the stocks that look like bull flags not work? Well, this week they didn't work. So I have a lot of homework for the chart patterns mastery to see if some of them retain their bullish structure. And just so you know, when I'm quiet, I'm looking for ideas. So here's one for you. Do you buy the Russell? Because, that's lagged. Well, the thing is, like I mentioned, oversold in a downtrend is rough. Now, if you're just a futures trader, sure, you could buy it down here versus the highs, versus the lows, risking about 20 points to make a lot. Other people, though, are doing this. They're waiting for it to get over that. The problem is then it'll probably be overbought, but they're probably waiting for that, which could happen, no doubt. But I want to show you another thing, just a day trading kind of thing. So you have an idea what we're watching in here. So this, let's say you want to play Caterpillar. Like I mentioned, the Caterpillar is really, really underperformed. So is Deere. So the stock right now is 211.68. And you're like, yeah, I want to buy the 215 calls for today. They're only 8 cents. The problem is this has to go up a ton higher than its high to break even. So you know that with the 215s. How about the 212s? Well, keep in mind, these are 39 cents. You probably can get them in between. This stock has to go up almost to the high to break even. That's brutal. So I just can't do that. If this was 210.50 and the 210s were like 70 cents, which they might be later in the day, that's a whole different situation. That's why we like to play these at the end of the day. And this is what we're talking about with the Apple puts. They're tantalizing you. Every down tick of the NASDAQ, this goes down, but then it's staying here. So every 15 minutes, they're destroying the premium. It's really frustrating. So other people use them. I don't use them. I use just support and resistance. But they work really great, but different people do them better than me. So usually when something is in an uptrend without resistance, I found the voodoo lines work a lot better. So do fibs. I like support and resistance. So when it's going crazy, let's say on a weekly like that, yeah, then the voodoo lines work a lot better. You might say that's resistance, maybe, but when it's parabolic, yeah, they work a lot better. So I think there's it's just there are other people on and simpler that are a lot better at it. Let's just put it that way. Oh, and I will tell you something. Number one, nothing looks bad. I mean, you see that. Nothing looks bad. Definitely nothing looks bad, at least not yet. There is one thing that could turn it around only up to Wednesday. Is there 50-50 funds that are long stocks, long bonds. So they have a portfolio. They reweight it every month. The problem with that is if stocks have gone up too much, like the NDX, and the bonds have gone down this much, I'll just use TLT. Like that, then they usually have to buy bonds and sell stocks. And they usually try to front run by Wednesday. But that's just a temporary phenomena. So that might happen. Maybe it doesn't. Usually, when it's this of a disparity, I'll show you on a daily. I think you see it. I can hardly fit it on a chart. That's a bear market when it almost goes below the bottom. There. When there's this much disparity, usually you do get some selling. Not in the bonds, they're way too liquid. In the stocks, but you don't have that yet. That's something to watch on Tuesday, no doubt about it. And like I said, you might say this is a blow off top. Blow off top. Well, that was under the ATR trailing stop. Definitely it could be, but it seems to make more reason to short it if it takes back half a candle. If you would have thought it was a blow off top here, it didn't work. Or here. Or here. But it did when you got the red candle. So let's go back to other times, 2000. Well, no. How about up here? That was a little rough, but at least you wouldn't have gotten destroyed. You got to have a big red candle. And at least you wouldn't have gotten destroyed if you got stopped. And then you got the red candles. And like I said, these red candles work a lot better if it's under the ATR trailing stop. So you don't have any of that criteria at the moment. Now, I personally think you're going to get that selling. You're finally going to get some of these dogs go up. So that's what I'm thinking. The problem is I've gotten really hurt at times thinking. Now, ASPN, yeah, at least it filled the gap. LAZR just not going up today. So, I mean, some of these you're like, well, they're showing relative weakness, but so is a lot of others, and then they kicked in. So, for the chart patterns mastery, I'll definitely be looking at bull flags for you. And to me, it doesn't matter if it's a short squeeze or not. Now, there are a lot of people that are going to come out and say, well, you went up on light volume. It's the day before Memorial Day. You're going to go up on light volume. Plus, I've seen 5 years of uptrend on light volume. So I don't even use volume. I'll use volume if something breaks out. So, like this would be more likely to be a valid breakout if it's on gigantic volume. But usually it just doesn't matter if it's a short squeeze because you just got to trade the charts. I have tried the other way, not very successful. So keep in mind, I've been trading for 40 years. I traded Outback Steakhouse when it went from 10 to 200. Sure, I thought it was a short squeeze. And then I lost money all the way up and then made money on the way down. There were a number of them like that. That if I would have just concentrated on a chart and not listened to CNBC, yeah, I would have done great. It's just really hard. So, but the short squeeze, usually when you get that straight up, probably, but you don't have any reversal to prove it's a short squeeze. And I'm not trying to be glib about that, but you'll know it's a short squeeze if you get a big red candle afterwards. I know that's a pain in the rump, but that's how it looks to me. Now, you are seeing that the ES keeps going up like the Energizer Bunny, but keep in mind that this is not oversold and it's trying to break up. So I'm probably going to look at some ES stocks for spreads above the market. That's what I'm probably going to do because that's not a short squeeze. The biggest danger, though, is number one, some negative divergence, but you don't care about that till you see a rollover. So rollovers like that. And it's already taken back like 50%. So I don't know yet. I'm not sure if I'm going to try to like get in things that refused that now are acting better or stocks that went down so much they can't go down anymore. That's a good way to get hurt. But that's what I'm watching. And like I said, for days now, the large tech has driven everything up and nothing else has gone up. And then it comes down to, are the other ones going to catch up? In 1999, everything went up. Very rare that nothing's going up this time. I mean, mostly. So everybody take care. Thanks for being with me. Like I said, right now is all about finding patterns, even intraday. So take care and thanks for the good questions. I'll talk to you later.